All right, we have a very recent article here, report, talking about the IRS. As Dan Bongino likes to say, the FBI, but this is the IRS. So let's get to the article, and then we'll give some commentary after we get finished with this article. So, the Biden administration has collected $1 billion, a few days' worth of Ukraine funding from wealthy tax cheats, in what the Associated Press frames as a showcase of how the agency is making use of monies received from the Inflation Reduction Act of 2022. Okay. So the outlet suggests that the announcement is part of a public push to raise awareness that a Republican takeover of the White House or Congress could mean future budget cuts for the IRS, which last year launched a series of initiatives aimed at pursuing high-wealth individuals who have shirked their tax obligations. According to the agency, the campaign is focused on taxpayers with over $1 million in income and over $250,000 in recognized tax debt. President Biden's Inflation Reduction Act is increasing tax fairness and ensuring that all wealthy taxpayers pay the taxes they owe, just like working families do, said Treasury Secretary Janet Yellen in a statement. Among the initiatives are measures to halt partnership basis shifting, potentially raising $50 billion over the next decade, and targeting improper deductions on personal flights via corporate jets. Eugene Sterling from the Urban Brookings Tax Policy Center emphasized the positive impact of these efforts, suggesting increased public support for the IRS if they can show they're having a positive impact and it's not impacting average American taxpayers. There would be more public support for this activity and the agency. That said, Republicans are not backing down from threats to make deep cuts to the IRS. House Republicans built a $1.4 billion reduction to the IRS into the debt ceiling in budget cuts package passed by Congress in the summer of 2023. The deal included a separate agreement to take $20 billion from the IRS over the next 2 years and divert that money to other non-defense programs. House Republicans' fiscal year 2025 proposal out for the Financial Services and General Government Subcommittee in June proposes further cuts to the IRS in 2025 and would cut funding to the direct file program that is being expanded to allow Americans to file taxes directly with the IRS. All of that said, according to Damian Brady, Vice President of Research for the National Taxpayers Union Foundation, says that the IRS is still targeting non-high net worth participants for audits. It should also be noted that nearly two-thirds of audits initiated in 2023 were for those making less than $200,000. Okay, well said, end of article. So this article seems to be basically pretty middle of the road. You have $1 billion that's supposedly being collected. They're saying that this is tied to a 2022 Inflation Reduction Act, which empowered the IRS. And then it says that this campaign specifically is focused on taxpayers with over $1 million in income, and then over $250,000 in recognized tax debt. So that's a pretty unique niche. And then finally, they said that among the initiatives are measures to halt partnership basis shifting, which might be a tax mitigation strategy for, I guess, partnerships. And then they're going to raise $50 billion over the next decade, I guess, via this direct collection on taxes. And but it still says that even though this might be possible, and they had talked to Eugene from the Urban Brookings Tax Policy Center, saying that look, more folks would be for the IRS if this was actually having a positive impact and not impacting average American taxpayers. Okay, that's the messaging. And then finally, it says that of course Republicans are still trying to chip into the IRS overall budget. But then it says here, of all that said, according to Damian Brady, VP of Research for the National Taxpayers Union Foundation, said the IRS is still targeting non-high net worth partnerships for audits. So, two-thirds of audits initiated in 2023 were for those making less than $200,000. So, it is what it is. That is a good statistic to know for those that are stateside forced to pay. But having said that, it seems that the focus is on most folks that are clearly earning over $1 million US per year stateside, and then they've already accrued or they're already sort of deemed to have $250,000 in recognized tax debt, which means that all those books are reflecting that. So that's really further up the food chain, and a lot of sort of alarm bells are going off of the IRS because it's already there for them in anticipation of getting that tax paid. And then if those folks that fall into this category do not follow through, then the IRS is going to be all over them. Okay, interesting article, good to know. Um, but it's good to know that 2/3 of all audits in 23 for those making less than $200,000. So I'm not sure if that should be just for individuals, not necessarily just for small corporations. Okay, good article. Happy to share this with you all. Have a good day.